Everyone's excited about this PDT rule change, and while I do think it is great news for the market and great news for new and small traders, it's also most likely going to be the exact reason that a lot of new traders fail in a very short amount of time. So in this video, I'm going to talk about what exactly I would do if I was starting over with a $2,000 account, how I would manage that account, the rules that I would follow, and the common trading mistakes that I would avoid in order to set myself up for success. Rule number one is going to be to limit my trades. Even though you don't have to with the pattern day trader rule being gone, this is still going to be a very important step in managing your losses and keeping your discipline and setting your trading account up for success. Because after all, the biggest mistake that we're going to see with new traders specifically when this pattern day trader rule is gone is going to be over trading. On any given day, there might only be a few A+ trade opportunities that are really worth taking. So there's no reason to be taking 5, 10, 15 day trades every single day. I would cap myself at 2 to 3 day trades every day max. Still, that's going to be 10 to 15 per week, which is already a big step up from the 3 day trades that we had every 5 business days when that pattern day trader rule was still in effect. Rule number two is going to be to position size based on survival, not based on confidence. And if you think about it, one of the things that most new traders do is size up their positions based on how much they think they can profit on a trade, when in reality, they should be doing the exact opposite. They should be position sizing based on how much they're willing to lose in their distance from their entry price to their risk level. To take a look here at this example, let's just say that our maximum loss that we were willing to take on any given trade was $100. That's going to be entirely up to your preference, up to your trading account size and your psychology. But just for this example, we'll say it's $100. And let's just say that for this stock CRML, we were looking to trade the opening range breakout. So we would be buying into this breakout above that first 5-minute candle's high, and we would be using the low of that candle to risk off of for this trade. In other words, we would be buying at about $12.30 for this example. Our risk level would be about $1.15 per share away. So in order to find our maximum position size for this trade, all we have to do is take our maximum loss of $100, divide it by our risk per share of $1.15, and that's going to give us our maximum position size for this trade of 87 shares. If you do this on every single trade that you take, you're going to make sure that your losses are managed, your losses are relatively small, and you're also going to have a little bit more of a clearer head going through the trade because you already know what the worst case scenario is going to be. And that's going to allow you to trade a little bit more based on strategy, based on price action, and a little bit less based on your fear, your psychology, and your overall emotions. So that's going to lead us to rule number three, which would be to take partial profits. This is something that very few new traders do, but unfortunately, small accounts are going to die from losses being both too large and too frequent. So that rule number two was put into place in order to hopefully keep your losses relatively small and avoid them from being too large. And this one, rule number three, should help you to prevent losses from being too frequent. And the idea of taking partial profits is that we're selling a portion of our position to secure profits as the trade progresses, and this should hopefully help us prevent winning trades from turning into losing trades. For this example at the bottom, let's just say again we were buying into the opening range breakout, and instead of selling our full position right away into this first spike, we would sell maybe 25% of our position, hold on to the rest. Once we get a move higher, we would sell maybe another 25% of our position, kind of repeating that process over and over and over until we have a full exit out of the trade. This is going to, again, allow you to secure profits as the trade progresses, take some risk off of the table. And, let's just say that at this point in time, after we sold a second portion of our position and we were still holding on to maybe 50% of this original entry, if this stock happened to dump all the way back down into our entry price from here and we exited out of our remaining shares, we would be selling half at break even, but the other half that we sold, we already locked in profits on, so we would be still overall profitable on this trade. And on the other side of the spectrum, if the stock does remain strong like it does in this case, we would still be holding on to 50% of our position to really be able to continue capitalizing on the upside momentum. Rule number four that I would give myself if I was starting over with a $2,000 account would be to invest in tools. Something that a lot of new traders don't do, myself included when I first got started. I refused to invest in tools, and ultimately it costs you a lot more in the long run. For example, a scanner is a very common trading tool. Without scanners, a lot of times you're going to be buying too late at the top of a move before it reverses against you. When with scanners, you're able to find these breakouts early and you're able to get into these trades before a lot of other traders, allowing you to capitalize on that move before it's too late. So paying $50 to $100 per month for scanners and other tools or resources can easily pay off 10 times or more every single month if you're using them properly to better your trading. That's why we include scanners for all of our team members at Master the Market, along with our education, our group chat, our trade alerts. They'll also have access to our real-time custom trade scanners as well. Now, all of that being said, if you follow those 4 rules, you're already going to be in a much better position than most new traders are with a $2,000 account. But I want to talk about some of the most common mistakes that new traders are also going to make that I think we should definitely try to avoid. And the first of those is going to be using 4-to-1 full leverage. Leverage is going to allow you to trade with more money than you actually have in your trading account. For example, if you have 4-to-1 leverage, which is offered by some brokers, a $2,000 account would actually allow you to invest up to $8,000 on any given trade. And while that is obviously tempting to potentially make more money if the trade works in your favor, it's also going to be a disaster if the trade moves against you and is going to be a very quick and easy way to blow your trading account. The second mistake to avoid is going to be to revenge trade after a loss. If you take a loss, take a break from the market for the day, close your computer, log out. There's always going to be another trade opportunity in the future. There's no need to jump back into something right away after taking a loss when your emotions are heightened. And mistake number 3 that I would try to avoid would be trading too many setups. If you're a new trader, there's no need to try to short parabolic spikes, buy breakouts, buy dips, whatever it may be. Try to find a strategy that works for you. You can do this a lot of times by tracking data and see which strategies are working best for your trading and your preferences. And try to focus solely then on that strategy instead of trying to trade every setup that you see. So give those rules a try and let me know down below in the comments if there are any specific trading rules that you plan on following now that this pattern day trader rule is going to be gone and you're going to have a little bit more freedom in your trading. In the meantime, if you're looking for a quick and easy way to level up your trading, learn how to read price action, identify key levels, manage your risk, and even learn a trading strategy that I use every single day, we have a 100% free beginner trading course at Master the Market. You put in your email at the link down below in the description, you'll be able to get instant access to this course. So I highly recommend checking it out. Thanks for watching. I hope you enjoyed and good luck with your trading.